Hey guys, welcome back to the channel, and today's question comes from May in Portland, Oregon. May asks, I'm going through a divorce and I'm not sure how to file my taxes. What do I need to do to make sure I file everything correctly? Well, great question, May. Going through a divorce can be challenging, and understanding the tax implications can be very complex. Don't worry, we got you covered. In today's video, we'll provide you with a step-by-step guide on how to file your taxes in the year of a divorce. Let's get started. The first step in filing taxes in the year of a divorce is to update your filing status. When you are married, you probably filed as a joint or married filing separately, but after the divorce, you'll need to file either single or head of household as your filing status. The head of household status may apply if you have a dependent child living with you for more than half the year. Be sure to choose the status that accurately reflects your situation. And remember, the IRS considers a couple married for tax filing purposes until they get the final decree of divorce. So if you're just separated, you'll still need to file as married filing separately or married filing jointly. Once your divorce is finalized, it's a good idea to update your withholdings with your employer. Now, this can be done by filling out a new Form W-4 with your employer. Next, let's talk about alimony and child support. So alimony and child support are no longer considered taxable income or tax deductible. Prior to 2018, alimony was considered taxable income to the recipient and tax deductible by the payor. But this rule changed with the Tax Cuts and Jobs Act in 2017, and as of 2018 is no longer impacts your tax situation. If you have children, determining who claims the child as a dependent can be a critical part of filing your taxes. Generally, the custodial parent, the one whom the child lives with the majority of the year, claims the child as a dependent. However, there might be cases where the parents agree to alternate years or make other arrangements within the divorce decree. Ensure you have a clear understanding of who claims the child as a dependent to avoid any discrepancies in your tax filing. During a divorce, it's common for assets to be divided. So if you sell any assets, such as a house or stocks, there may be capital gains or losses to be considered. Typically, each side will report their share of income and expenses, but depending on the state in which you live, community property rules may impact the splitting of income and expenses. The rules around this can be complex, so consult with a CPA to determine how these transactions should be reported on your tax return. Filing taxes during a divorce can be tricky, so don't hesitate to seek professional assistance. A tax advisor or certified public accountant can provide valuable guidance to ensure that you navigate this process correctly. They can help you maximize deductions, minimize your tax liabilities, and ensure compliance with the latest tax regulations. And that wraps up our guide on how to file taxes in the year of a divorce. Remember, updating your filing status, gathering relevant documents, understanding alimony and child support, determining child dependency exemptions, considering asset sales, and seeking professional assistance if needed are all essential steps. We hope this video has been helpful to you. If you have any questions or need any further assistance, please feel free to reach out. All my contact information is in the description down below. If you found this video helpful, please give it a big thumbs up and hit that subscribe button. And as always, thank you very much for watching, and we'll see you in the next video. Take care.